Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So first things first, one broker account, not doing great these days. This trade was a hopeful filling the gap to 1280 that didn't happen. Got stopped out at 1215 before it went up a little bit and then went down hard. This trade was a knife catching thing that didn't work out, and this was also a knife catcher that didn't work out. So that brings us to the current trade, which I'll tell you why I opened a trade recently through the video, but I am currently long again, so we'll see how this works out. I have a lot of charts for this video, so I'm just going to do them all live. I'm going to start with Heiken Ashi. So always start on the highest time frame that you like or you prefer. Weekly's always best. Bitcoin's pretty young for monthly. Doesn't even look like there's many candles, I don't even think. There's enough. Let's start with monthly. Why not? So the big thing with Heiken Ashi, like Cloud, I talk about this in the Bitcoin Brave New Coin articles. What you want to do is your entry around the flipping of from red to green, okay? So let's say you're long from 581 based on this. The flip would be the close. The stop would be when you start to see candles like this. This is a really poor example. I'll show you better on the daily. But what you're looking for is candles like this before this turns red. If you're long from here and this is a red candle, you're out at the close. And hopefully that's profitable. This is a really quick trade example for that because normally you get a few candles before stuff happens. So this is a poor example for that. So again, you're long from the flip, you close at the flip. You're long from the flip, you'd still be long, there's no close of the flip yet. What you're starting to look for now is open of the candle below the previous close. When you get successive opens and closes above the previous opens and closes, that tells you it's bullish, and then there's super strong momentum. The width of the candles tell you that as well. That's monthly. Let's go to weekly. Weekly obviously is going to have more red candles because it's fine-tuned, zoomed in a little bit. So if we just start with this example here, let's say you're long from this flip at 606, you would have closed on this candle somewhere. Okay, again, you're long from this candle, this green candle rather, somewhere in the 900s. You would have closed. Ideally, what you're looking for, you'd be watching this on the weekly, so you'd be seeing, oh, this one closed or opened below the last close or open, so you would place a stop here at the wick. Okay, so that would be 1053, and you can see this would have closed you out from 900. So it's 150 bucks right there. So now what you're looking for on the weekly is, again, a green candle. The first green candle is a super strong buy signal if you're in an already bullish trend. Now if it was a red candle, you'd be looking for in the bearish trend on the flip from green to red, if that makes sense. So right now we're in a bull trend, and I'll give the argument for that throughout the video, but we're in a bull trend, so you're looking for a green candle on the weekly, a green close. So if you want to, wait until it closes, it obviously mitigates a little bit of risk because you're not sort of playing around in between things when stuff hasn't closed yet. If we go to the daily, same story, pointing out examples here. Again, you're long from the flip from red to green, and you could move your stop. Anytime you see like this doji stuff, this small candle, that's when you want to move up your stop. So you're still in this trade, and you get closes and opens higher, and again, you move your stop here, you get some more bullish action, but then you would get stopped out based on this 1010. So that would be, let's say 900 to 1010 if you're playing that on the daily. And again, same thing here, 1K, you would move your stop up twice here on the daily. When you see these, I call them spinning tops on regular candlesticks. And then you'd move it up again when you see this spinning top. So you'd be in at 1K, you'd be out at like 1230 because you'd get stopped out on this drop here. You could get back in here and you'd kind of get wrecked because this was basically too fast for Heiken Ashi to give you a better signal on the daily. So again, right now, the safest entry for long would be a flipping of a daily close from red to green. It can be super tiny like this. You're better waiting even 2 days on the daily just because there's quicker signals. Otherwise you risk, going doji and then another drop. So really it's up to you, but that's the kind of stuff you're looking for with Heiken Ashi. Let's just check 4 hour. I normally don't look at 4 hour with Heiken Ashi because it's pretty noisy and the signals overall aren't great. So depending on how you play your stops, you definitely have to change the strategy a little bit. So, you could have been short based on this second or third candle here. And when you see a green candle, you don't have to necessarily close, but you can then place a stop here. So you'd be short from 12:30 to 11:60, either close or stop, and you'd still be short. And again, you'd move the stop down to this spinning top around 1080, still be short. These candles are really wide, really long, so that tells you this trend, this micro bear trend is strong. We are starting to get closes above previous closes, so that tells you that bear momentum is weakening on the 4-hour, which is what I want to see as somebody who's long and thinks we're in a bull trend. So that's Heiken Ashi. I won't talk about most of what I wrote about in the Brave New Coin article, so check it out. I'll put that in the description. Plenty of good stuff in there. Chart I do want to talk about that doesn't get a lot of attention. It does amongst people who I talk to about it, but basically this is the quarterly rollover for OKCoin futures. So essentially there's a contract that's open for, 3 months? So that would be 4 quarters in a year, right? So there's 4 contracts, 4 quarterly contract periods every year. And my argument is during this rollover period, so basically quarterly goes from, weeks away to days away, and then finally when it gets close enough, it goes from bi-weekly to weekly, and then it closes. So my argument is during this 2-3 week period, we are either at the bottom of a trend or the top of a trend, okay? So bottom, top, bottom, relative top, and the argument here would be if it's binary, if it's truly binary, and we're at either a bottom or a top, we are at a top at the moment because there's volatility and there's this M double top. I didn't update this, but basically what it's saying is we're going to have a sideways to bearish quarter till things figure out what's going on. Another thing I want to mention from the Brave New Coin article, not a huge fan of harmonics, but this was a bullish bat. So the target would be 50% of the entire move, and you can see we've hit this target. I haven't updated this, but it hit it way quicker than I thought it would. So if this is real, it's going to play out somewhere to 1111, which is kind of an interesting psychological level. Should we break 1000 on the bounce? Okay, so let's get to some meat and potatoes. Why did I go long? So I'm looking at this chart. I'm looking at a few things. I'm looking at the 200 EMA, which is a huge support resistance level. Again, if your price is above the 200, you're bullish. If it's below, you're bearish. That is the simplest, cleanest way for anybody trading, new or otherwise, to decide quickly without multiple indicators and analysis paralysis and oscillators what's going on, okay? So you can see from 2015, it's been above the 200. It's held above the 200 this whole time. The only times we've really hit the 200 were the Bitfinex hack, and this was part of the dev rage quit sell-off, my Kern dump, okay? So that was that shenanigans. And you can see we're getting close here to a 200 touch again. We didn't even touch the 200 during the PBOC all-time high sell-off, okay? So that's part of the argument that we're close to a bottom. Another part of the argument is we're in the cloud, which says we are in support at the moment. I would have much rather us bounce like we did here. We're above the cloud, but I'll take this at the moment. It definitely says we're not bearish. When we start closing below the cloud, that's when I get worried. This was the only time since 2015 where we closed below the cloud. So that was an opportunity for the trend to cease to exist if there was going to be one, and it chose to go the opposite way. And again, that's a great entry because it's flipping from bearish to bullish, just like on Heiken Ashi flips from red to green. Okay. So Kuma breakout there. The other reason I like this is because this pitchfork here, and I'll show you the big daddy pitchfork, macro pitchfork. This pitchfork here shows us bouncing on this blue quartile support zone. This is the last stop for support should it happen until this pitchfork is invalidated. But don't worry, there is another bigger pitchfork where we haven't even hit the blue zone yet. I'll show you that. And then the other argument for this being the bottom would be just market memory. There's a lot of, I don't have VWAP on here, but I'm guessing that there was a lot of volume in this price zone. And then finally, the last argument for this being an interim bottom is RSI is close to the 30. Again, I would have liked for it to, just as it did in my Kern dump and Bitfinex hack dump, to sort of spike into the 30, below 30 zone. That really is a nice bottom in a bull trend. Some people trade that, so they would trade the 30 spike down through the plus 70 spike. If it's in a bull trend, you're expecting it to bounce somewhere. So again, if this should continue, which trend is your friend until the end, you're expecting a bounce here. And again, something I like to do is keep everything from the high time frames on the chart and go down to a lower time frame. If this is 4 hour, you're fine tuning the telescope, the microscope, whatever you want to call it. You're trying to get those surgical entries. So again, look at here, double wicks into the final last support of the pitchfork. It's also interesting that the distance from the 200 we are here is greater than the distance we were post PBOC announcements. So this tells me when you're this far away from the mean of the trend, you are super oversold. Yes, we are below the cloud. Yes, we're bearish. Yes, I'm trying to call a bottom in an otherwise crazy, volatile time, but this is starting to look like a bottom to me. The other thing the cloud is telling me is we are super far away from the Kijun, which is another return to mean sort of line. We're super far away from the median line of the pitchfork, which will be at 1200 by the time this figures itself out on the 4 hour. So again, anywhere from 1100 to 1200 I think is a really good bounce point when this finds a bottom. RSI doesn't really help me too much here. On the 4 hour, we're getting lower lows and lower lows in the RSI, so there's no div pending or building on the 4 hour as far as that's concerned. If I go to 4 hour 5200 cross, which is again golden cross, death cross, mainly on the daily, but it's useful on the 4 hour as well. You can see, we had this death cross, golden cross. If we get another death cross, golden cross, that would be, again, the same thing with Heikin-Ashi and cloud. When it flips from bearish to bullish, that's your entry right there, if you're assuming you're in a bull trend, okay? So you got to assume we're going to stay in this bull trend, regardless of what happens with the fork, which I haven't even mentioned and don't even want to think about or talk about, but you got to just assume it's going to keep going, which at this point is a very risky proposition. You either, in my opinion, do nothing here with the fork, or you just get it back into cash and wait till things figure themselves out. So this is Big Daddy Macro Fork, published 5 months ago versus me drawing it right now, so it's more believable, gives it some validity. So if you hit load twice on here, you can see we were in the overbought quartile, the blue quartile, and we are headed for the oversold or buy this dip quartile. The mean, again, would be this median line. So as scary as all this looks, and it looks scary, especially with all the stuff in the pipeline right now, it's really, in the grand scheme of things, since 2015, we're fine. This is fine. This is fine. Everything's fine. Okay? There's nothing to worry about is what I'm trying to say. And I have to keep that in mind myself with all this fork FUD going around, that price is going to figure itself out and everything's going to be fine. Famous last words, I know, but again, I'm pretty hopeful. That's a bad word to use too. I think that's a bad word to use too. I'm feeling the technicals are right here, that this is the bottom. Here's another interim inverted head and shoulders, super early. You can see we tried to build one here where we had shoulder, head, and didn't reach the neckline again. We decided to dump. So I'm looking at this on the 2 hour, and shoulder, head, shoulder. It's going to be a pretty large inverted head and shoulders should it complete, similar to the one that completed on the daily after the PBOC dumps. And I like this neckline. If you zoom out a little bit, you can see lots of support resistance for 1133 here, and if we truly make a neckline up here at 1160, this is a non-conservative target somewhere of a new high level. We can also bring this down 1353, so basically back to 1300 should the inverted head and shoulders play out. And lastly, I'm just going to run through the cloud on a few time frames. So I don't do this often, but this is the singled cloud, 1030, 6030. And you can see again what I keep saying, we're getting these touches, Kijun, on the median line. So we're getting all these median line resets. This is another reason to be long. Kijun bounce potential here, okay? This is what you want to see. If you're looking for a continuation in a trend, you want to see bounces on the mean or median line or whatever you want to call it of the trend, okay? Another important thing here is the cloud is completely in agreement with just continuation, okay? Which is beautiful. It's what you want to see. It doesn't certainly mean that we can't play around in here for an extended period of time, but right now everything looks on the up and up. Going to the daily singled settings, we had a TK cross, which is super late as far as being open from here and closing when the cross happens. Obviously you'd be at 0. So that's another argument for not using the TK crosses as your exits in Bitcoin, just because it's always stairs up, elevator down with Bitcoin. Even here, you were long maybe somewhere in here on this TK cross, and you'd lose most 75% or more of your profit without using a good stop on this. Another thing I like on the daily though is Again, we're bouncing on the cloud. We closed literally on the edge of the cloud at 966.50, which was the previous Kijun or 50% fib of this. So that's kind of creepy and eerie. If you believe in magic, it's not. Another thing here, cloud is still green. If we get a twist from red to green, that would be, again, like I keep saying, anytime you get bearish back to bullish in a given trend, it's a good entry signal. Similar to the entry signal here, let's just see 30 periods back. So everything flipped back to bullish down here, and you were already above the cloud. So on the daily, your entry was somewhere around 1,000 based on singled settings. So I'm kind of coming around on singled settings for cloud on high time frames as far as usability and actionability. So everything still looks fine on singled settings on the daily. Now we may just bounce around in this cloud because we are in sort of intermediate stages. You can see this whole trend, we haven't really been in the cloud except for the Bitfinex shenanigans. We go to the 4 hour, again singled settings on the cloud. This is also showing severely overbought C-clamp sort of conditions, which is what I want to see if I'm in a long, and as far as candles are concerned. I didn't really mention this yet, but wicks here, that tells me we're in a support resistance zone. It's tough to call this a bottom, just seeing the savagery that we've had lately, but it looks pretty good. So real quick, running through the doubled cloud on the weekly, your Kijun bounce would be 845. If you're looking for a definite buy number on that. Going to the daily, you can see we're in the cloud, still haven't had a TK cross. This is a edge-to-edge potential, which I don't like if I'm in a long. So this could hit 915 before we see a real bounce. Not a fan of that. Or we might just stay shooting around in this cloud in sort of indeterminate trend phase. Something I'd like to see, again, TK cross recross, but you really need price to be above the Kijun and the TK for that to feel real to me. When we get, I don't think it happens too often, but when we get a TK cross recross below, when price is below the TK lines, it feels like a divergence to me. It doesn't really make sense. So that's daily, still hasn't crossed on the TK lines. Daily hasn't gotten the bearish memo yet. Going to the 4 hour, again, C-clamp, super overbought. The levels are painting 1186 here. Going down to the hourly, overbought, strong bear trend. When you see stuff like this where it doesn't break the Kijun, that's a signal for continuation of trend, bearish continuation in this case. And again, I'm looking at these candles. This is either going to be a falling wedge or a descending triangle. I don't think it's really decided yet. Go to the 15-minute last chart for the video. That's super long already. What I'm seeing here is a few things. The first, descending volume profile, which is what I want to see as far as finding a bottom. Selling is slowing down, which is good. Seeing the lagging span enter price, which is one of the first signs that the trend is slowing down. You're seeing this C-clamp forming, which is good. You're seeing a W for winner, which is good. You're seeing Adam left, which is a V, and an Eve-ish, so Adam-Eve formation. You're seeing price break the Tenkan for the first time in quite some time. So bearish continuation would be a bounce down from this level, but should it break 1016? Which it should hit 1016 at least, or hit somewhere in this cloud resistance. That would be the first target. Second target would be the other end of the cloud. And then if you want to get in super early on the 15-minute, you'd be looking for a Kuma breakout. And by that time, the TK lines would have recrossed, unless we get like a $200 candle. So that's all I have for today, guys. Massive video, massive Brave New Coin articles. There's going to be a massive Ethereum article coming out on Bitcoin Magazine, so I'll post that out when it hits probably Monday. Hit me up on Twitter, Telegram. Let me know what you think about all the Bitcoin Unlimited stuff. I really don't know anybody who supports it outside of Ver circles, so it's pretty interesting that it might actually take over here. Happy trading.